If you had something like positive in this market, what would you say right now?
Well, the most positive thing is we're getting close to seeing real fear. It may be happening right now. It could happen over Thanksgiving. No.
Hey, you need to recognize that the individuals in the podcast to follow are expressing their own views and not necessarily the views of their firms, their affiliates, or associated entities. All of this content is for informational and educational purposes and shouldn't be considered investment, financial, tax, or legal advice. Any mention of securities, digital assets, investment strategies, all of that is for illustrative purposes only. All investments involve risk, including the potential loss of your principal. Past performance is never indicative of future returns, and listeners should do their own due diligence before investing. They should also consult a qualified financial professional.
Welcome back, everyone, to another session of Alpha Sessions. I'm Dr. Sebastian Purcell from 1.2 Capital. I'm joined by our regulars, Zach and Rich from BitRidge. And today we also have Bill Noble from BLT Consulting. You can read more about him in the bio. Needless to say, we're really happy to have you on the show right now, Bill. It's an interesting week. I had a chat on Real Vision on Tuesday, and we were calling it Panic Day back then because we thought it would be one day, maybe two, of panic in the crypto market, and it turned out to be like, well, I don't know, we're still panicking. The CMC market cap is reading a 15, like their fear and greed index is a 15, and it's the most days in the extreme fear range that we've ever had on that darn thing, which makes me want to buy, but I know better. I know better because I taught stats, and a sample set of 3 is like an N of 3 is statistically just nonsense. So don't take that reading to be definitive of a contrarian signal, but it is an unusual signal. So with that in mind, let's go ahead and start out with what we normally do, sort of a tour de table, just top of mind. Bill, since you're our guest this week, what's top of mind for you right now in the markets?
All right. Well, since you brought it up, fear greed is probably a function of like relative strength indicator. I don't know if they're like knocking on people's doors and going, is there a crypto trader in the basement we can talk to? Right. It's a function of RSI, and RSI can stay low if you're going to have a dislocation to the downside. Now, that said, top of mind is Bitcoin is a part of the AI trade. AI will change many things, transmission of value, obviously. So when everyone talks about a bubble, I think they took it out on crypto. They took it out on Bitcoin, and that dragged the whole space down.
Right.
So, I think NVIDIA earnings will change that, but the proof is in the pudding, namely, it's not a bull market until you can buy a dip and make money. So if it went up and then it comes back down, on these little tactical levels, that's the test.
Right.
But, with NVIDIA, it reminds me of 1999. I was actually there for that. And, I can give you more granularity on that as we go through.
Yeah, we're going to have to come back to that. I was there for 2001. Yeah, I'm older than the other guys on our channel, but to speak to the youngins, technically I'm Gen X also. So speak to the youngins. Zach, what's top of mind for you?
Yeah, I would say top of mind for me, put it all in one sentence. It's make or break for crypto right now, in my opinion on it. These next 2 weeks are critical in deciding what type of stage of the market we're in. Are we looking at something that's just a healthy retrace of the bull market, like going back to the sample size you were talking about? The sample size of 3 is just a repeat of that, or is this truly entering and exiting a bull market into a bear market? And I think I'll go into more detail on it, but there's a lot of things pointing to right now is that if it's going to be a continuation of a bull, there really needs to be some things fixed and rectified, and a bounce coming very soon.
All right. So if I'm understanding you correctly, Zach, it's the make or break moment for, I don't know, the crypto space and the 4-year narrative. I do sometimes wonder if it's just this idea that there's a 4-year narrative. The old whales are like, it's always 4 years. I always sell. I don't care about anything else. I'm just taking my money. And they don't look at liquidity, and maybe that's just what we're getting there.
To go off of that, and I'll go into a lot more detail on this too, is that people people need to understand at a certain point, right, that when certain things aligned, no matter how great and constructive the macro and scenarios are, psychology can create a self-fulfilling prophecy. And that's my largest concern right now, is if things keep lagging, it creates this self-fulfilling prophecy that the cycle is over. There is potentially enough there, and that's why I go back to charts and TA. I'm not a super huge TA guy. I like it because of psychology. It gives me an insight into it. There's enough TA and breaking points here that if it bounces the right way, it gives extra accelerant for a bounce. Well, you look at things like the death cross, the 50-week moving average, like all this types of stuff. Reclaiming that gives bullish momentum, and if it can go, it can push higher. But the biggest thing is you got to think about right now, you need to, in order for this bull market to continue, you need to have people convinced and fully believe that the 4-year cycle is over and everything is gone. And that's when the market will come back.
Yeah. All right. So you want to see exhaustion. Interesting. Interesting. Well, we'll have to come back to that. Rich, what's top of mind for you?
I think just continuing off that conversation, and is the 4-year cycle actually dead, or is it just going to be extended? The way I kind of feel right now is everything is so bad, and everybody had such a clear expectation of when to exit this cycle and how clear and easy it was going to be this time around, that we actually needed this fear and to get kicked in the nuts pretty hard. And I'm hoping, things will turn around. We're going to get through this holiday shopping period here over the next week. Companies will be reporting Black Friday sales. There will be a narrative, and we're just going to have to see, does that come over to crypto? Does it stay in stocks? But as of right now, the K-shaped economy is still heading in that direction. The people at the top are still making more money. Assets are still going up. And even though crypto, might have slipped out of that correlation a little bit, if that trend continues, I expect crypto to continue to go up in the long run here.
All right. Yeah. No, global liquidity is still going up, and there's two ways to read those charts. People have seen them, the M2 global charts of liquidity going up, and Bitcoin is no longer tracking it. And they've given Raoul Pal a lot of grief for that. But there's always two ways to read it. Is maybe given the fact that we've had $50 billion worth of OG whale selling pressure, maybe the chart explains why Bitcoin isn't worse. It's never a complete story from one image. So I actually kind of want to come back to your thoughts, Bill. You said you had thoughts about how this was in some ways like 1999, and I'd like to unpack that because most things that happen in a market have happened before. They just haven't happened very recently before. So if you can help our institutional memory, I'd really appreciate it.
I would be happy to. So I'm going to share about 1999. I know we have a statistics professor on, so he's going to love my spurious relationship here. So this is the blue is the entire history of the Bitcoin ETF, okay. Superimposed on NASDAQ before it went vertical. So, you had this dip in October. I remember my father worked for Merrill Lynch. There was a guy named Charles Clow. He was the chief investment strategist. He was like, don't buy, don't buy, don't buy, don't buy, all in here. Wow. There were dips. Now, unfortunately, Charles Clow got fired here. Okay. But, NASDAQ wasn't a gradual trend in 1999. It was a grinding trend before it went vertical, and the bearishness here about a bubble and irrational exuberance was robust. So, all right. So taking my spurious chart off, here's how I unpack, if that's okay.
Yeah.
NVIDIA, despite their questionable accounting, is confirming demand for GPUs, which is helping Bitcoin miners. And this whole idea of, oh my God, it's a bubble, it's over. If there's GPU demand, that helps miners. They sell less Bitcoin. And rather than the end of a 4-year cycle, I would say this could be another halving, because miners have sold what they need to sell, and they don't have to sell anymore. And that actually comes from Van Eck. That was my, inspiration to do my artwork here. So if if that's the case and you get a catalyst for Bitcoin, which could come out of Japan. I mean, you have fiat bond markets falling apart out there. That could also be negative. I'm not going down that route. But if like 90K holds, because, Zach's right, it's just charts are a mess.
Yeah.
Okay. But I'm when I do my artwork, I wonder, because in research you get paid for imagination. What happens if there's a reclaim of all these moving averages? And also, things like the 50-week moving average, again, respect. But that was like Benjamin Cohen secret stuff, that wasn't on Twitter like the M2 graph was. Like put it on Twitter, it breaks.
All right.
Potentially. All right. So I'm imagining a bullish catalyst. Today's the new moon. Nothing ever good happens on a new moon if you want a little voodoo. And to complete the cornucopia, the market loves to do 20% moves on U.S. holidays. They either get you while you're shopping for the holiday, or they get you after they eat your dinner and you're trying to watch football, and boom. So the market could crash, and I don't know if we need to do a podcast to talk about how it could crash, because that's kind of in progress.
Yeah.
I'm sort of wondering what happens if you and I understand JP Morgan reported 94K as the cost of production. Somebody has to check that. So if we start leapfrogging even 100, right? I asked Gemini 2, what's the pivot? Above, belong, below, don't. It's 100.
It's 100, yep.
And Bitcoin at 50, to round out the voodoo, Bitcoin ETF at $50 is the 50% retracement of the move from the yen carry trade to the top. So if we're gonna do the 50 anything, let's do the 50 we talk about on the institutional podcast, while still totally respecting, Zach's right, a weekly close below 90, and I'm gonna be hiding under my desk. So that's
chaos.
That's the macro overview.
I want to pick up something with Bill said, because that's all very, very true and very interesting with it. And this is maybe not the most institutional way to look at it, but I want to take it different. I want to talk about a lot of qualitative stuff right now, because I feel like, especially the people listening to this, they're smart enough, they've seen it. I always forget when these come out. So we may honestly be talking in the past of how these things and information, everyone is kind of aware in terms of the quantitative side of things and how the charts is. I want to look at the qualitative, because in my opinion right now, crypto is still small enough to be pushed around based on what someone wants. And so I've been trying and racking my brain for the last 2 weeks to understand what is the outcome that is people are going to want the most. And it's become very interesting, and I've shared with all of you here over the past week, the amount of people that have come out bullish for crypto. I mean, you obviously have exchanges, you have market makers, you have Eric Trump coming out. For me, it was very interesting to see Besant come out. I mean, it's hard to tell. These all kind of sound like top signals, but they also could be really bullish, because a lot of people are putting their reputation online. Tom Lee, can't forget about him.
Coinbase came out and said the bull market's still going,
Exactly. And it's all very interesting. So I've started to kind of wonder right now, and without getting too much into this type of stuff, this is an ugly growing pain period for crypto. It's the institutionalization of the asset. And I think we saw that with a lot of whale capitulation. I don't know how much is still going on right now. A lot of this week has been driven more so by ETF outflows, which has kind of probably been more of a catch up to the whale capitulation. But it's almost been like there's been a targeted effort to transform. There's so much Bitcoin out there that is in the hands of whales, and to get it in the hands of institutions is how to get them to sell. Right. Timing it, creating as much immense fear as possible around a 4-year cycle where people have been around forever and know the cycles. It's a great way to kind of get this out of the hands of these whales that can really put and lean on whatever institutions want to do with it. Now, my other thought and my concern with it is, while they're doing this, if this is truly what's happening and they're ideally wanting to kind of bring things low, there's going to be some type of catalyst in December. or January, something like that, whether it's clarity passing, something of that. And Brian Armstrong keeps talking about that, something that provides a good solid news article headline that gives that bullish boost for if they start moving the market up, it gives the accelerant. My fear is that with any type of manipulation, there's a certain point where things just break and you can't come back from. And that's where I start looking at the charts, not so much as it's important, some of these technicals, because technicals can always be flexible. But like I mentioned at the very beginning, it's an insight into psychology, and it transforms the psychology from people saying, this cycle is over, I need to get out on every bounce, to this 4-year cycle is dead. We're reaching a new paradigm. And that's the biggest thing. And that's when I start looking at things like the weekly close, is where that starts to leak a little bit more into mainstream type people looking for confirmations right now. It starts getting mentioned a lot more. Is what is everyone going to start looking at? What are these algorithms going to start looking at to get a confirmation of whether or not they're going to chase a bounce or they're going to sell anything at, like start looking at selling at 110 instead of trying to chase it up to new all-time highs? That's the question I don't have the answer to. If we can figure that out here on this podcast, we're going to make everyone listening to this a lot of money.
A lot of money. No. So what I'm hearing are two things, if I can kind of break that down. One of them is that one worry is that market makers or somebody may be angling to position the market a little lower. The market in general is small enough that it is open to a certain amount of, let's say, manipulation, if we can just put it out there like that. And since it's smaller than, say, NVIDIA, it is a target. And since there are benchmark prices on something like Binance, it's not too hard to move the relevant prices on the market. Now, one concern is that they might, while they're trying to get a better entry point, they might push it too low and kill sentiment totally, and we won't recover. And the other one is that even if things recover from here, there's going to be sort of like a panic cap, maybe around 110 or something like that, where people just start, okay, I just got to get my money out at this point, and we're never going to really see a blow off top. Am I hearing you correctly?
Yes, it's very much so. And this is a very scattered thought, because it's me looking at like this board right now, drawing all these strings to all these different events going on and trying to find a connection and a pattern. I may be drawing connections to things that aren't connected, and there may be things that I'm pulling up that aren't. It's starting to get very interesting for me, because there are reasons for things to be bullish. Adoption has never been higher. It is here to stay long term. Do not get me wrong when I say this. I probably sound bearish on this. Blockchain is very much the future. It's very much going there. The amount of institutions that have adopted it and have dedicated full teams, those do not go away. This is not an experimentation phase. This is a full build out. It will be here. It will continue to be here. It will continue to grow. That being said, for how that reflects token prices is going to be important. I would say for Bitcoin and Ethereum, it's all a good thing right now. All the other stuff is questionable, because even people that rag on Ethereum, the price has been terrible this cycle, to see the type of all-time high it hit. But at the end of the day, the adoption that's happening on Ethereum, the price will need to continue to be economically incentivization for people, because without it, the network isn't secure. No one's going to want to hold it. No one's going to stake it, which basically kills the whole value prop of every institution building on it. And that is where institutions are building. They want public networks. They're experimenting with other stuff, but it's because they're on their own digital asset journey, which we have been on before, where we first get into blockchain, is tokenize everything. Oh, wait, I don't want everything all on a public ledger. I should really start having a private chain. Then you start looking at private permission side chains or private permissible chains. Those things get big. Then it's like, okay, you know what? I should really just do this in-house instead of outsourcing a third party. And I can do this all through a layer 2 on my own, and also to have the optionality to have it a public chain. And then it brings it all back to Ethereum. You see it now, even some of these other Nillion just shifted to a layer 2. It all comes back to Ethereum. But at the end of the day, Ethereum's price needs to catch up and reflect that, because there's no economic incentivization to secure the network if the price of the token doesn't go up.
Okay, yeah, no, that's really useful, and we're gonna have to come back to that point. Lee Drogan from Starkiller Capital made a similar statement about sort of the way in which block space doesn't have the value that people initially had hoped because of all of these larger firms are building their own things, and I think that does have an effect on other L1s, right? So this proliferation of L1s, we're going to see a consolidation because there just isn't a need when you have, somebody like a Stripe building their own blockchain, right? They're not going out there and they're not picking Monad or Near or something like that. They're just going to do their own thing, and that depreciates the value of the blockchain space more broadly. But yes, it certainly helps for the ones that are established, like Ethereum. It's easier to just move them on an L2 basis. I wanted to pick up on a point that you made about, or maybe it was Bill made about Japan very briefly, the unwind. This is a draft from our newsletter that went out, so I'm going to try to pull it up here. Bear with me, folks. Okay, there we go. Super sophisticated stuff. I can probably zoom in a little more. So this is for our Cypher newsletter, and I was trying to find a good way to put this on the screen for people. Well, that is the Japanese 10-year bond, and you will notice that it is doing nothing but going up. And I mean, you all remember that like 15 bips increase, like, caused a huge freak out. And now what we're seeing is that, Japan is, they are raising rates. It looks like they'll have another 25 bips in December or something like that, to 75 bips. Total, which is a lot for Japan, and I think it's important to watch this as relatively inversely correlated with Bitcoin. Over the recent period, last like 120 days, it has a negative 0.54 correlation, so that's not nothing, but it's not a stable correlation. I want to be clear. It's not a super stable correlation or inverse correlation, but it is something that's worth watching for the moment, and I think helps explain where the liquidity is going. In brief, this is me putting on my hat as just a sort of a macro global analyst. Yes, global N2 can be going up, but that doesn't mean that it's flowing into risk on spaces. Flows and liquidity are different. So what might be taking some of those flows out of more risk on assets? I was just looking at, well, there it is. There's the Japanese trade is, the carry trade is definitely unwinding, and that certainly eliminates appetite for further risk on options. It's also coming to an end, and I think that's good news. That is coming to an end. So I don't think that we're going to see the Japanese 10-year go up a whole lot more after this, and they still have a population decline, and it's still structurally going to be, they're going to be facing not an inflationary pressure, but disinflation to deflation longer term. We know what that story looks like, but for the moment, and that's eons for a crypto trader, it does look like it's taking some liquidity out of the market, or at least not liquidity, flows to risk on assets. So that just kind of, it's a point to add, I think, Bill, on what you mentioned, and Zach, I think it's a point to add relative to, I don't know, the growing concerns about this space. I don't know, Rich, I see that you had a thought there, and I don't want to cut you off if you had a point that you wanted to interject here.
No, I mean, look, I'm definitely leaning on more of the bullish side here. Like, I hear all the concerns, I understand the structure in the market, but like ultimately the amount of major players that have been entering the space over the past year, the fundamentals that have been improved for crypto in the long term, the amount of investments people are making into the space, like all of these groups are not here to get wiped out after year one and Bitcoin dropping back down to 50K. I mean, I just don't see that happening. And like, no matter how bad things get, even this AI bubble, I just saw the founder of Klarna, who built $1 billion business on reinventing debt, just went on to say that the spending is ridiculous for AI next year and it could be a bubble and all this good stuff. All that aside, though, like to Bill's point earlier, it's really only going to take one mega bullish move and feel for the whole market to turn around and say, oh, we're back. We can make this happen. And sure, they might manipulate it as we get to 110. They might, whatever. All those things are possible. But ultimately, like people are coming into this space to do something outside the stock market and to make outsized returns. And even on Zach's point of Bitcoin and Ethereum, right? Like, I think they're obviously the future, but just like every other cycle, whether it's extended or 4 years, as soon as Bitcoin slows down, as soon as Ethereum slows down, money will flow into these smaller projects, regardless of their utility. Let's keep in mind, 90% of crypto is bullshit utility forever, right? Like, they're going to go into these spaces because it's where they can make the most amount of money. Whether that's good for the space in the long term and all these individual projects, totally up for debate. But ultimately, like, I don't think that changes. And I think right now, the world is in the most uncertain point it's been in a minute, right? Everybody is terrified. There's war, economies are going to collapse, we're going to invade Venezuela, like all this stuff, right? But at the end of the day, I don't know that anything other than noise, and I think we're still going to keep kind of moving in this extended direction because of everything I started out saying.
I want to add on that. Rich brought up a really good point there, and I wanted to mention this too, because it goes into what I was talking about, incentivization. You look at the banks, you look at BlackRock, you look at the ETF providers. This has been the most successful product they've ever launched. But this is the first full year of it, and Bitcoin is down on the year. That underperforming gold in the S&P 500, underperforming QQQ. It is a horrible look for Bitcoin. At the end of the day, when you see a chart like that and you see price action like that, who's going to want to buy this? Who's going to want to invest in it? So I go back and I want to say this as well. I want to go with a phrase that Bill had drilled into my head for a very long time, as long as I know him, of don't fight the Fed. I look at this as there's almost a scenario of the same thing as don't fight the market. And I'm wondering where that's the case, because right now I see all the incentivizations, all these people coming out, the way people, the institutions, not people, not retail. Maybe this is what it is, rinsing out as much retail and small hands as possible. The way institutions, the way the large players make money is for crypto to go up, to continue that adoption. And there needs to be a certain amount of window dressing around it so that their reporting looks good. If it can't do that, there is a really big issue. And for me, that's where it starts to kind of collapse and look at, okay, are we doing something and we're going to head towards new all-time highs? Or are we going to maybe at best get a relief bounce and just cut straight down to 70? That's the hard, and that's where I look down at kind of where this 2 weeks are very kind of key to determine where that psychology is. Because exactly what Rich said as well, Bill said, everyone said, all it takes is one thing. Price is volatile enough and moving enough of a thing that things can flip, and everyone's like, oh, this is the greatest asset in the world. It's the greatest market tool in the world, this price, momentum. The headlines will find themselves. Right now, it looks like crypto, good news doesn't matter. Bad news matters 10 times more. When does that stop, or does it stop anytime soon?
Two potentially quick things to add on that. More bad news is coming, right? Like, my background is I'm an e-com founder. I've built a successful business a few times. I can tell you right now, all of the founders are shaking in their boots. Everybody is short stocked on inventory for the holidays. Tariffs messed up supply chains across the board. I'm not saying that's be all end all. I'm just saying there's more negative news coming, and maybe that's just part of it, and we're just gonna have to ride through that and get to the other side. My only I agree with what Zach's saying too, but I would also just challenge to say, if all of these institutions are coming into the most volatile space that has a traditional 4-year cycle, right? And they all know this, they're the experts, they're moving around millions and millions of dollars. For them to naively come into this space and think that every year it's consistently going to go up and they're consistently going to look good on their charts and they're always going to have these growth returns, I think is a little naive, right? If I'm them, I'm thinking long term. I'm not thinking every quarter has to go up. This is not the S&P 500. I know they have their reporting and they need to look good and all of that, but there's also a level of, you have to know what you got involved in, right? This isn't just magic chart go up every quarter forever and it's going to be volatile as hell. I would hope that that's part of their analysis of how to get in here, and it's not just going to spook everybody to run to the streets if they have a down quarter.
On this dollar yen thing, so if you have dollar yen and the possibility of a bubble, equities players, I don't know. it's been, bottom left to top right for so long, they don't have to think that much. So if they're worried about a bubble, and I don't know, they may already be long puts or short stocks, or maybe they're not, somebody might go, hey, what's going to move down the fastest? Where do we get bang for the buck on a put option? So somebody might go to the IBIT, derivatives market, buy puts. To crypto people, it looks like manipulation, but they're just trying to buy downside protection in the fastest moving thing. And they're like, wow, some kid told me that this is the end of the 4-year cycle and then it goes down 80%. Let's buy a bunch of puts. So that may be a play. And, as Zach said, that can break the market. Everyone's like, oh, it's an ETF. It's up only. No. The plunge protection team can move equities higher by shorting VIX. All right. Bitcoin could get pushed down because people are buying puts on IBIT. You don't know. I mean, I don't have that data in front of me. So to Zach's point, you can break the market via BlackRock, or you can cite the famous adage that, hedges are things that little doggies pee on. And if you get the thing going the other way, they could break it or they could get broken. I'm not here to serve Kool-Aid, but manipulation could just be, oh my God, give me downside because I'm afraid of the bubble or dollar yen. Dollar yen, I think, is scarier than the bubble talk.
Right. Yeah, Bill, just to kind of why certain TradFi fund managers may be thinking that way, here is a scary chart for them. Probably not for crypto people because it's rather wonky, but what we have is corporate bonds minus the Fed funds rate here in blue. That's just a moving average, which is not really useful for a chart like this. But what you're seeing there is the credit spread, right? And recently we've had these big moves up, like shooting up here in the, it was kind of coming down since May, the corporate bond spread here, and now it's moved up. And I find this sort of fascinating in general. Of course, since September it's been going up. There's been a worry about firms. These are the Apple stocks of the world. It's really Oracle, I think, is largely responsible for blowing out a lot of this. But those corporate spreads are rising, which indicates that traders are worried about a default possibility on some of our better firms. Interestingly, if you look down here at the junk bond spreads, those are not blowing out, which I find to be just peculiar. I don't know why high yield wouldn't blow out. This, by the way, was that over there was Liberation Day, with Trump. So why high yield wouldn't blow out, but corporate bond spreads are beginning to blow out a little bit. This looks odd, and that may just make sense of the points you're making, Bill. Is effectively somebody's looking to buy some puts. The crypto market looks great in that scenario if you're looking to hedge some of this stuff, and that makes sense. I was looking at this for a little while. I don't really need this thing here. This is the XLF, so the financial subsector, and it was dropping. Notice it is coming back after NVIDIA earnings, effectively. There was worry about, I think that shows you pretty clearly, corporate soundness, sort of our financial subsector, because if you compare that to the SPY itself, this is, I'm just kind of tracking how far this is above the 200-day moving average here, like 9%. But this has been up. The XLF has been struggling. Right? And typically in a credit market cycle-induced recession, 2008, the XLF leads down. And so I was watching that. It did not break below its moving average, so no reason to panic, but it is certainly not performing as well as the rest of the market. And that just goes to your point, Bill, that there are some sectors of TradFi that are doing less well than other sectors of TradFi. And the result might simply be a desire to hedge. And why not hedge where that one area of the world that is known for being the most volatile area, the digital asset space. And the other idea, of course, is that we're still living through what I think is sort of an IPO market for Bitcoin and Ethereum or anything else that has a DAT and an ETF, because you couldn't sell $50 billion worth of Bitcoin before all of this stuff without just cratering the market. Those whales didn't hodl because they wanted to. They largely hodled because they had to. And now we finally have the liquidity for them to exit. And if you want like a comparison, it's worth looking at something like Coin. So Coinbase actually did a direct listing, and let me just kind of show this to the audience because I think it's instructive to look at what a direct listing is. This is not a typical IPO. And a direct listing, so there's Coinbase, it's been going up, right? But when you direct list, all of the officers can sell immediately. So if I zoom into that first day when it listed, boy, it was super volatile and went down. It kind of went back up for a little bit of time. You can see that's their 200-day moving average. But in large part, this did nothing but sell. A 90% decline. Just as, basically the C-suite, everyone, they all sold first day. And this did not do very well. Direct list, you can sell on day one. That's not your typical IPO. And so it took a long time for this to kind of find price discovery and then recover afterwards. And it did quite well afterwards. But Bitcoin has the equivalent of a direct listing IPO. And that means, I think, that you would expect, I don't know, a year and a half downward pressure. That could just be it. They can finally, the whales can sell. They can pick up their billions of dollars, and we should expect them, however long this takes, until they're done selling the damn thing. And that's really annoying because we don't really know how long that's going to be. But Coinbase took about a year, and that gives you some perspective, I think.
I will also mention with the Coinbase, that was pretty close to the top of the cycle at that time too. So it gave them kind of this prolonged, even worse of a bottoming type thing. But what you're saying, Sebastian, that IPO, it kind of goes into, is this a transition phase for crypto from being this out there, Wild West? Still, there are so much holdings out there that's not institutionalized. Majority is not, to being more institutionalized. Is this how they're doing it? The question is whether or not, how much that transition is going to look at. And Sebastian, if you do me a favor, could you pull up a trading view again? Because I want to show one other chart to the audience with it. Because I want to mention this, it goes back to the point where I feel like these next 2 weeks are such an inflection point. But I want to show the tether dominance chart, because that has always been an interesting indicator to look at in terms of range. When tether dominance goes up, that's USDT.D. There you go. So when tether dominance is going up, that means crypto's going down. Tether's a larger share. People are selling into it. People want to hold more and more tether. As you're kind of even seeing from this chart right now, when it goes down, that means crypto is typically going up to get out of tether as the largest stable coin into crypto. This 6% area has been a very common point of resistance in this channel, and it's being tested again. So it goes back, showing, you look back historically of where breakouts have done, how it's feared with other price cycles. It's just another thing I want to mention with this. It's another key inflection point. Is this going to decide, if we shoot back below 6%, we flip the 50-day moving average, all these things, everyone's looking at it, how much they matter. It matters to some people psychologically. It's all reasons that could be a propellant to launch things forward. So it's one of these things that I just want to mention to show it to you as an indicator that's like things are at such a critical point right now that really decides where the cycle can move and where it's going to go, or just where we're at in terms of price. Are we going to get a near-term pop? Are we seeing new all-time highs anytime soon? Or do we all need to potentially log off, go sit in cash for a while, which no position is a position. I think that's very important to reiterate. Even no position right now is good until you want to wait for a confirmation one way or the other. This is just a very interesting time for the next 2 weeks.
On this idea of crypto equities, hedge funds have been long Bitcoin, short MicroStrategy for years, right? And, Thanksgiving's coming up. So unwind the MicroStrategy short because they did it via the derivatives market and dumped the Bitcoin. And that money is going back to TradFi. It's not rotating anywhere within the ecosystem. So Michael Saylor, you know, the MicroStrategy issue is like a tightening force for crypto because they sell the Bitcoin and they leave. Now, one thing I wish the guy would stop doing, I wish they would just take his phone away, is the more Bitcoin he buys, the more expensive he's making the stock. So just stop it. Let the stock get super cheap. And then when the NAV comes back above 1, right, when it's no longer cheap or expensive, then the market can recover, right? I mean, that's my version of the, you know, tether dominance trade. It's the Michael Saylor nightmare trade because, you know, that's another thing that can look like manipulation, right? Guys just, you know, let's market sell this thing and go home. So how much of that is left, I don't know. But, you know, again, it circles back to Zach's point. Hopefully these guys can get out of their trade and not crack the market because, you know, this market can be cracked.
Bill, I want to ask you this because it's on the topic of taking phones away, right? When you look at the people that are coming out now, whether, I mean, Eric Trump, Besant, Winklevoss twins, saying never see below 90K again, the exchanges, Coinbase, Brian Armstrong, market makers, Tom Lee, etc. All these people coming out saying that this is just a dip, it's just a shakeout, which is, it's following the same track record around 30% that you've seen before. What does that read to you? Are you getting this kind of talking the book out of desperation type thing to save? Or are you seeing that it's more, these are savvy people trying to talk about what's going on? I mean, there's also been some very clearly kind of maybe top things going on, like Dave Portnoy coming back to stream in day trade crypto, making large purchases there. But what are your thoughts with it? And then obviously, as Sebastian mentioned earlier, JP Morgan the day before NVIDIA earnings saying it's the everything rally is coming soon. JP Morgan and Bill, like you said, at 94 still keeping its price target of 170K. Like, what does this mean to you? Is this real analysis? Is this sell side just talking its book? Is it a desperation to keep things afloat? What do you feel on that?
Okay, so I think these larger players, like let's take a Coinbase or a Michael, maybe a Michael Saylor or, you know, Mike Novogratz from Galaxy Digital. They can say the things they're saying because they see the order book that we can't see. They know what's underneath. They know where demand is. Okay, that said, there are the three I's, you know, the innovator, the imitator, and the idiots, right? We are seeing the idiots in the market, and they're getting liquidated right now. Again, you know, a further pain in our ass. However, when it comes to Tom Lee, you got to remember, 2018, Tom Lee made himself famous for going on CNBC as this market cascaded lower, particularly from 6,000 to 3,000 when you had a change in the cost of production. And he just said, my target's 15,000. I'm like, hey, Tom, it's at 3. Is your target still 15,000 in 2 weeks? He's like, yeah. And guess what? You know, it traded at 3,000 for 3 months. And then, you know, 19 days after the government shutdown in January the following year, it went to 13,000. You know, and then by that time, everybody had laughed at Tom Lee, going back to another famous phrase. The only way to get famous at Wall Street is to lose money, right? So, you know, Tom Lee made himself famous for being both right and wrong. So if Tom Lee is saying it, you know, I'm okay with it because he's got a track record of being wrong then right. And then, you know, if we can get the village idiots flushed out, if we can just scare them to hedge or whatever, right? Like I don't see it all here in my world, but you know, like that's why I'm counting on. That's where this idea of it takes, I don't know, if Bitcoin returns to being a part of the monetary reset. I don't know what the catalyst is, right? If we knew what the catalyst was, it wouldn't have a dramatic effect, right? Yeah, right. So, you know, we need the, you know, we have a setup for a white swan, but we still have to look at this tape in the meantime.
Yeah, and just to kind of develop a point there from two things that you've all been saying. One of them, what I was trying to show is that these DATs are strange. MicroStrategy is the only one that's really down on the day, but its correlation with Bitcoin has popped back up above 0.8. So I was trying to show, like, with those little green lines when I was bringing those up, those are correlation charts. Really interesting on the USDT dominance chart. Very inverse, negative 0.96, right? So that's physics level acceptability there for an R squared. So that suggests quite directly that, yes, when USDT is going up, you could probably expect Bitcoin to go down. And MicroStrategy, a little bit unlike the others in its space, has been struggling. Metaplanet up 13% on the day. MicroStrategy down almost 1.7, to go to your point, Bill, taking away a phone. He's just making it so much more expensive, right? So his is the only of the major Bitcoin DATs. His is the only one that's struggling today. The rest of them are regaining value. So, I don't know what that says for sure, but it certainly suggests that perhaps that short the MicroStrategy, long something else, that the market is treating MicroStrategy or strategy differently than the rest, the other DATs, and differently than Bitcoin. That is for sure right now.
It's so interesting, right? Because we go back to the idea of correlation, right? Like, what Bitcoin has been most correlated with over the year has been the QQQ. I think it's been sitting at about 0.8 or something like that. But now in this recent stretch, correlation has gone up, but only on the downside component. And you look at the market right now, everything traditional up, crypto down. You would think after it, that's where I get into this, like, okay, I agree with everyone here. It just takes one thing and we don't know what the catalyst is. But the question is, when does that anchor actually happen? When does that flip? And is there enough sentiment around to even attach themselves to a positive anchor at this point?
Yeah, so just to your point there, you can see that even with this is the big April, like, Liberation Day, correlation remained, right? It has just since, roughly late August, early September, has just fallen off the rails. That was at 0.91, and now it is inverse, right? Dropping down to the negative 0.44 range, like, just crazy. This is, by the way, a rolling 120 day correlation here that we've got going. So, relatively slow to help you pick things out, but it has just fallen off the rails. That's inversely correlated. It looks like it's kind of coming back up, maybe, to your point, Zach, but this is just, it's a mess. They used to be very strongly correlated, and typically speaking, when you find these levels of, losing correlation, that was because the QQQ was dropping, and Bitcoin was doing better. That's what was happening over here. Now it's the reverse. Bitcoin is struggling while the QQQ continues to climb, which kind of goes to your point, Bill. I wanted to unpack this. You mentioned earlier that you thought of the digital asset space as something like an AI trade. I want to hear more of your thoughts around that. Like, in what sense is it an AI trade, or like the AI trade?
Well, put simply, it's about doing things differently, right? AI and robotics disrupt everything. Bitcoin disrupts finance, in my opinion, because it becomes collateral that people borrow against, replacing treasuries. Do you know what I'm saying? It's like, so it's a part of this transformation. I also think you're going to need privacy and blockchain for verification of just about everything. So that's part of it. And, I got to always have a joke, I guess. Machines are not going to trade fiat. Machines are going to look at fiat and be like, they're going to use crypto. Whether they use Bitcoin or not, they may use privacy coins, which could account for this Zcash pump. And, the other thing about Bitcoin being a part of the AI trade is, there's a couple different forms of Bitcoin. Everybody's only long one. There are others. Machines may wind up using those because they're just faster.
Yeah.
So there's a little bit of basic disruption and sci-fi behind the idea that Bitcoin is a part of the AI trade.
Yeah. Okay. I can see that. Yeah, that makes a lot of sense as a disruptive technology for it. All right, let's wrap up with a few final notes. Zach, if you had to be positive, what would you be positive about?
Yeah, I mean, to mention it at the beginning, it is here to stay. The adoption is here. I'm long-term very bullish on the space and on crypto. Right now, what I'm talking about right now is I am just trying to figure out where things are in the next few months and what that means. So it's like short-term. Even then, short-term, I'm still very much trying to read the tea leaves. I go either way on it. And that's the scariest part because it feels out of your hands as you wait for the situation to kind of develop. So when does this get released? I always forget.
Monday?
Okay.
Monday.
So I will go out on a limb and say this, and I'll look like an idiot on Monday or after 2 weeks or anything like that, but I'll put at least a little bit of a target out there. I will say that going off of weekly Bill's thing, closing the weekly below 90K, it's a bear market. It's going to be a bear market. Anything is going to be a relief coming from that. Within 2 weeks, if we do not close, ideally, I'd love to see it this weekend. I don't know how it happened. We need something that'd be a white swan to happen. But within 2 weeks, if we do not close above the 50-week moving average, probably a bear market looking for relief for alleys, etc. Because it gets into the point of even if they pump back up, people are going to be selling. I am not optimistic about 2026 being a good year macro, and there will be a lot of reasons. And I think there are people that believe the 4-year cycle is dead. They have every reason to. Will point to a lot of things that shortened and said the cycle wasn't the same. This is why I opted that, but it ended up following 4 years again. I think that there is a good possibility of that. I will also say this too. I want to mention this, and I could be entirely wrong with this. I think even if we do, this is just purely guessing, nothing to sort behind it. If we do hit those bullish targets, which I think are a real possibility that I mentioned, we flip and it becomes new all-time highs, I still think we will follow a relatively close time to a 4-year cycle. And right at the peak of everyone saying 4-year cycle is dead, new all-time highs, it shows with the chart, I forget the name of the chart all the time, that when you get to that new paradigm level, it'll pull out right from everyone and it goes back to the 4-year cycle. I believe it's still in place, as this is the transition period from traditional crypto people to institution until the next halving.
Interesting. All right.
What was the positive comment there? I might have missed the positive outlook.
Was the long term. It was the long term.
Yeah.
Long term, and the fact that at the end of the day, it really just takes one thing to flip this, and just a little bit of price movement. That's all. The price differential between these two, whether it goes extremely bullish or extremely bearish, is so small. And with how thin the market is right now, liquidity is very thin. It can move very easily. That's the thing. It's like we're teetering on a knife. So the positive is that the positive is the same as the negative. It can go either way very easily. Right. And I will also say there is so many incentives for larger players governmentally, or in the government, institutionally, for it to go well. Especially when you look at stablecoin adoption, the demand is put on U.S. treasuries. If Bitcoin in that market starts to fall and disappear, the demand for that type of stuff isn't going to be there. And the U.S. government wants demand for treasuries.
Yeah.
So I'll leave it at that. Hopefully that makes sense, but I can reiterate bullish points if needed, so I don't sound too... I'm not permanently bearish. I don't think this space is going away. It is not going away. It is not going to die. It is all about what's happening for me in the next 2 months. Because at the end of the day, I'll also say this too. We're a fund, right? We're long-term, we're fundamental in nature. Long-term, the fundamentals look great. Personally, I would not be opposed to buying right now if you're looking at, I'm just going to hold it for a very long time. But in my own thing, I'll say you make a lot of money if you're able to approximate where things are going to be. And you look and things in your own personal returns are going to be a whole lot better if this is truly a bear market when you're buying, say, around 70 or 80 than you would be around here. I will also say that in a downtrend, it's probably going to be a lot softer than what it has been in the past because of the institutional adoption.
Yeah, it's not as you don't think you're not as negative around the 80% drops. Bill, final thoughts. If you had something like positive in this market, what would you say right now?
Okay, well, the most positive thing is we're getting close to seeing real fear. It may be happening right now. It could happen over Thanksgiving. 87 was a crash in October. People don't realize that there was a retest of that low in December at Christmas. My father was a stockbroker, and he was clearly not as excited as I was about my Optimus Prime action figure, like the 14-inch one. I remember that look on his face. If you see real fear in this market, risks to the view, it could crack it. On the other hand, if real fear appears, that does provide a more sort of, fertile soil for something to come along, like the Japanese government buying Metaplanet. They've bought so much stock. I mean, I think they own 10% of Japan's Walmart. So let's go buy Metaplanet, and we'll give you a little bit of Bitcoin if you buy a JGB. I know, crazy. But you're going to have to look, you got to use your imagination to get through the fear. And if that doesn't work, well, gentlemen, we'll see you in 2 years.
Super helpful. Thank you. No, I think that's a good point about the intervention. Especially, I think it's a sleeper thing. People are not paying enough attention to the way the Japanese government, which traditionally has had an outsized effect on the crypto space, is doing things like pulling liquidity out and so forth. So I'm paying attention to it. And if you look at, just a note to the audience, if you look at, I don't know, when selling pressure begins to happen, it's usually about 10 p.m. East, which is open market for them over there. So a lot of this is being Far East Asian market driven. And the focus on the United States, I think, is actually misplaced. It's not like things that are happening here are directly affecting so much of it over there. At least it's not the marginal buyer or seller at this point. Rich, what's your final, like, you're the most optimistic. So what's your view?
Yeah, I mean, not to be the cheeseball Kool-Aid drinker here, but like the most simple way is just be greedy when others are fearful. And I know, there's a little bit of a variance right now on who's being greedy and who's being fearful. To Zach's point, there's a lot of really cheesy people out there right now saying they're making buys, and, hats off to Dave Portnoy, whatever. But like, all of crypto Twitter this is dead. All of the major players have given up. They're all depressed. They're all tweeting about how crypto is a scam. And ultimately, like, as a foundational, fundamental investor, right? Like, I've given up trying to predict the short-term moves of this market. It is crazy. We all know it's crazy, but my long-term outlook still remains the same. Fundamentally, things have never been better. There's going to be manipulation. There's going to be shakeouts, especially as we start to hit this new threshold of being above 100K, which would have been completely out of the realm of possibility just a few short months or years ago, right? So long and short, like, it's going to be rocky. There's a lot of news events coming. It's going to get scary. It could go to the downside, but fundamentally, I'm still going to remain bullish. And that's how I'm seeing the market.
Okay, cool. Super helpful. Yeah. And my view is broadly constructive. I think, Zach, you and I maybe are a little different. I tend to think that my biggest worry in 2026 is really the corporate debt wall, which doesn't happen until the end of Q2. Sovereign debt walls there's a lot of things that the Fed and the Treasury can do, like sort of covert yield curve control by various means to do something. Corporate debt walls don't tend to move like that. They have to actually pay those loans back. And that's why I am a little worried at the end of Q2 what that's going to look like. That will definitely be liquidity exiting the market. But until then, global M2 still looks like it's going up.
I definitely agree with that sentiment too, and Zach's call out. I do think at some point next year things are going to get crazy, especially in traditional markets. I mean, Amazon's 600K jobs are going to disappear over the next year from AI. It's all going to be transformative. It's all going to be exciting, but there's going to be a lot of shakeups. That's for sure.
Yeah. So, I mean, until then, I'm hopeful. Bill, to harken to a point that you made, the holidays. That's when the moves happen. I'm hopeful we get like a good holiday thing. I'm around there with I'll be visiting family, and I want to check my phone and get the green candles. I hope that happens. Who knows? It's really
me too, man. Me too.
I want Bill's plus 20%.
Yeah, that would be
Day.
that would be great. That would be beautiful. Who knows? But anyways, thank you all. This was super helpful. A lot of informative point of views, and for the audience, come back. And we do these bi-weekly, so come back in 2 weeks and we'll give you another one. Take care.